Ladies and gentlemen, surprise! We are back with the podcast. It's been a long time since I left you without a podcast to step to. We're back. You're tuned in to the Monday morning podcast, live market report with yours truly, the Algo Capitalist, aka the Vulcan, coming to you live from postwavetrading.com, home of the world famous post wave price trigger reports. But enough about me. It's all about bonds and banks this morning, ladies and gentlemen. Bonds and banks. Are we witnessing the collapse of the U.S. banking system? A few weeks ago, a video surfaced on social media that was a hidden camera conversation among our biggest banks and financial institutions that were having a secret meeting. And a recording got out about that meeting as they were laughing and saying that the U.S. citizenry have way too much faith in the U.S. banking system, more than the CEOs of said banking institutions and financial centers. And they started laughing. And they talked about contagion and they talked about what they would do when that time comes. And what was discussed is that when that inevitable day arises, they will wait until Friday, close of business, before they closed all the banks for good, basically. So they were laughing. They're letting you know that, in their opinion, the whole U.S. financial situation is a joke. Now, that is bad enough in and of itself. We agree. That's messed up. But we've been to this rodeo before. We've seen this playbook before. All right? It's not new. It is not new. So, the issue is, what is everyone going to do about it, right? Remember the 2008 financial crisis? Well, that was a banking crisis. The banks colluded with the Federal Reserve Bank, the central bank, to give mortgages to any and everyone who asked for one. They saw it as a means to stimulate the economy. When the stock market is not doing so well, real estate used to be the place people would go to look to make money. And it's this merry-go-round parading of characters that have always worked in normal circumstances. So you had your bond market and you had gold, because gold is a hedge against inflation, right? Bonds are supposed to work when the stock market is not, right? So if there was a flight to safety, people would take their money out of stocks and put it into gold and bonds. What if I were to tell you that for the past several decades, that process has not worked at all? It's broken down to the point where bonds and stocks and gold would crash together at the same time, simultaneously, taking away the whole safe haven hypothesis. So now people are taken aback because they're like, there's no way that we could have known that this was happening or this would have happened. Remember when Bernanke said that? He said he didn't agree with the hypothesis of the question when they were asked about the systemic potential of the back during the 2008 financial crisis before it happened. I think that interview was in 07. He said he didn't agree with the premise. And then after it happened, and they were like, well, we told you so. He was like, no, there was no way that anyone could have known when that was a lie because you had just had the conversation about it beforehand. So to claim ignorance after the fact was very disingenuous by Mr. Bernanke. But we're having it again. When Janet Yellen has been grilled, she's like, no, everything is cool. It's not what you think. And then all of a sudden, we get this crash alert that a major bank in California has been taken over by the FDIC with billions and billions and billions of customer money. And then they say, well, there's no way we could have known, which is also not true. As equity investors or equity traders, whatever category you fit into, you have to be honest with yourself when it comes to these things. You know what you're doing. You know there is risk in markets. Now, the law says that you cannot tell people that your money is 100% free from risk or that there is a risk-free investment. But they contradict their own laws. See, a registered person can go to jail for that or be kicked out of the industry altogether and fined and penalized. But when they, the institutions, say it and do it, it's okay. What am I talking about? Lately, and for quite a while, really, you've been hearing them say that when you put your money in a U.S. Treasury security, i.e. bonds, it is 100% secure. It's 100% safe investment. There's no such thing as 100% safe investment. You just said so in your literature, and you make all of your registered advisor agents take a complicated securities licensing test to drill that into their heads. You can't say that. Even if there were such a investment system or investment vehicle that was showing that it never lost, you still would not be able to say that legally. You would have to say past performance is not indicative of future results. Why would you have to say that? Because no one knows the future. You could have a trading methodology or a trading investment vehicle, so a security that's never witnessed a down day in its life. All of a sudden, that day comes. Now it's no longer 100%, is it? So that's why you're not able to say that. But they say it when they talk about the U.S. Treasury all the time. Treasury bonds, safest thing you can do with your money. But we know that's not true. We know that there have been times in memoriam, current decade, and in decades past, where bonds did not outperform the stock market or any other market for that matter. So that means you lost money. Now, I know some people say, no, that's not true because you always get back your principal. You never lose your principal. Yeah, but if the investment vehicle doesn't perform the way it was intended to perform, that's still a loss. A loss is a loss, whether it be an opportunity loss cost to you because you could have put your money in a better performing asset instead of having it in a non-performing asset. Because they always sell you, well, you're going to get whatever the coupon is guaranteed. If it says it's going to pay you 2% interest, that's what you're going to get. Yeah, but if I could have got 45% interest by putting my money in Tesla during the same time period, I just lost money. You see what I'm saying? But they don't like to talk to you and put it in those terms because then you would be too hip to the sham. So this morning, it's all about banks and bonds. Banks and bonds go together. They go hand in hand. And you see that this morning when you look at the markets. You're going to see that the banks and bonds go together. So let's take a look. I know some of you are at work or driving in your car. You don't have time or the wherewithal to look up stock quotes, so I'm going to help you out a little bit. This is as big as I can get the picture, so I know it may be hard to see, but just go with me anyway. US dollar index right now is down almost 100 pips. It's down 87 pips at 103.70 after hitting a overnight high of 104.39. So it's down pretty hard. And that helps the euro to rally up 76 pips and the sterling to rally 85 pips. Even the Aussie is up 80 pips. But the big thing in the room right now is Bitcoin. Bitcoin futures are up over $3,000, 3,000 points. Ethereum up over $205. Something is happening, isn't it, ladies and gentlemen? How about crude oil futures down $1.88 a barrel? We're talking about wild volatility. Peep this. Crude oil futures last night opened at $76.68. It then proceeded to rally to $77.47. Then the floor was pulled out from under the market and it dropped all the way down to $72.30 a barrel. That's over a $5 drop in the price of a barrel of crude oil. 500 points gone. Now you got a dead cat bounce, and it went from 72.30 to 74.66. Something is happening. And then you scroll down here to gold. Gold futures is up $44.60, trading over the 1900 mark. Has been a while since it got there, but it's there now, 1911.40. Silver up $1.24 at $21.72 an ounce. And that's a rally off the overnight low of $20.64. All right. Something is happening. Now, the stock indices have been the wild, wild west. They've been all over the place. The Dow futures opened at 32,269 last night and proceeded to rally to 32,600. All right, that's almost a 500-point rally in the Dow before collapsing all the way down to 31,742. That's right, almost 1,000-point trading range in the Dow. Now you're at 32,111, down 58 points. Yeah. The NASDAQ, same thing. Opened up at 12,008, rallied to 12,223. That's over a 200-point rally, only to collapse down to 11,806 and a quarter. And now it just bounced from that to 12,001. Ladies and gentlemen, something is terribly wrong. Then your bond futures is up 2 full points plus 1930 seconds at 131 and 29 seconds after collapsing to an overnight low of 128 and 730 seconds. And it opened at 129 and 1430 seconds. Something is happening. Now I'm going to divert your attention to somewhere else. People like to say, I didn't know. There was no way we could have known that something was wrong. Really? Feast your eyes on Exhibit A. This is SVB Financial Group. All right? I want you to see what happened on Friday. For those that need it, the ticker is S as in Sam, I as in Indian, V as in Victor, B as in Bravo. And it's traded on the NASDAQ, believe it or not. Okay, so this is another reason, too, why you have to use the tools that are before you. For those that are new here, this is a screenshot of the um, algo charts that we use in our market analysis videos. And it shows you that the market SVB, regardless of what the talking heads on TV were saying or on the radio, was in a bear market. And it's been in a bear market for a while. Yes, you had this bear market rally that started after the 52-week lows, the week of December the 7th of 2022, where the market rallied all the way from $198.10 a share all the way up to $348.06 a share. Powerful bear market rally, right? Luring people into a state of complacency. But if you were paying attention and not just looking at your account statement, you'd have noticed that something went terribly wrong. On the week of January the 20th of this year, 2023, the market gapped up on the open. Gappage, massive gappage. Oh, and the gap was never reconciled. So that was your warning right there, okay? That the market had to come down to close this gap. What did you learn watching my videos for over a decade here on YouTube? You learned that gaps and pointers must always be reconciled, especially at major price inflection points in the market, this being one of them. The market continued to go up, ignoring the gap, and even gapped again and pushed higher on the week of February the 2nd. But then something happened. The next trading session gave you a red alert, a crash alert. Now, if you were paying attention, you would have realized that this warning, okay, was to be expected because you never dealt with the gap that was created back here. A day went by, nothing happened. The following day, you got another alert saying crash alert, downside imminent. Another day went by, nothing happened, luring people into complacency. The next day, another crash alert saying, look, we've been warning you that this is going to happen. I know it's been 4 days now since the initial crash alert back here, but something is coming and you're not going to like it if you don't take precautions now. This right here was your third and final warning. If you were long this market, to get out. I don't care what they were saying on TV. I don't care what they were saying on the radio. I don't care what they were saying in the literature that they may have mailed out to you if you were a shareholder, or when they had those conference calls or whatever. I don't care what they were saying to you. This was your third warning in a 5-day period. Your third crash alert warning. What happened after that? The market started to fall rapidly. Then it lured people into a state of complacency for a couple of weeks, moving sideways, doing nothing. But then another alert, a crash alert warning the week of March the 1st, saying something's not right. Another leg is coming, another leg down. After 2 days of nothing, another crash alert saying, look, we're trying to tell you something here. You need to listen. And then the final alert on the week of March the 7th saying, get out now. If you were long the market, get out now. You may even want to consider going short. Technically speaking, you had from the week of February the 3rd until the dreadful day of judgment came to get out of your longs or to get out of the market altogether, if not short. Because you're in a bear market, by the way, you sell rallies in a bear market. If this happened to you, it's because you weren't paying attention. You were drinking the Kool-Aid, thinking that, oh, the market will go back up. Prices will go back up. Prices always go back up. This market is falling and cannot get up and will not ever get up again. It crashed to a new 52-week low, burning and ripping the face off of who knows how many people. The markets tell you what's going on. Everything that can be known or is known in any given security is already factored into the price. Now, I know you've heard talking heads in the mainstream media say, especially on the finance channels, the business channels, they always like to say, no, you don't understand. Everything is fine. This is sound. This doesn't make any sense. No, we're good. We're strong. They know how to talk up a good game to keep you holding the shares. That's what they do. That's what they do. They're hoping and preying on your ignorance and feeding you and pumping you with nothing but hopium. Hopium after hopium after hopium. They keep feeding it to you, hoping that you'll go and you'll hold on to it until it's too late. They knew something was happening. All right. They used this bear market rally to sell their shares and get out of the way. This is why you need something like the pulse wave reports, because you would have been given multiple warnings. Multiple. If you held on, it's because you were praying and hoping that something was going to happen that did not happen and would not and could not happen. All right, so let's check this out. In our live chat, Mr. Bodie or Mrs. Bodie said yesterday at 4:30 p.m., my local Bank of America ATM in Connecticut said, can't dispense cash right now. I was only going to make a deposit to pay my credit card off, but I held onto my cash for the time being. Ladies and gentlemen, facts. They're facts. Now, something else I noticed this morning, and that is that on your business channels, they were talking about, how do we prevent a bank run and things of that nature. First of all, to me, that was being said in bad faith. They already know that the U.S. is immune to bank runs. A bank run will never happen in the U.S. And one of the reasons that it won't happen is because Americans have very short attention spans. And they're very senile, very forgetful. Have you not forgotten what happened back in 2008 when people attempted bank runs? You don't remember? You don't remember the automatic weapons that met you at the front door? You don't remember that? They have so many means and ways to prevent bank runs in this country. One of the things they would do is just close the banks. You can't run on a bank if the bank's closed and the doors are locked and there's no one home. There's no one dispensing cash. That's the first thing they would do. The other thing that they could do, which they talked about, is limit how much money, if any, you can withdraw from your account. That's right. They'll say, nope, when you're not allowed to withdraw any cash and or you are not allowed to wire any money out of the country. They won't let any money leave the country, and they will limit and control how much money you can take out of your account in cash. And they can even go as far, and this is not something that's talked about in the mainstream media, but I'm going to tell you right now, the other thing they can do is impose spending limits on you. Yeah, that's a shocker, isn't it? They can impose spending limits, daily spending limits, even if it's a credit card or a debit card, that it has an account attached to it, they can put limits on it. Nope, you met your limit for the day. You can only use $100 a day. That's it. So sorry, so sorry, so sorry. Spending limits. And that also extends to any online retail shopping you do. So you want to go to Amazon and fill up your cart on some stuff. Nope, sorry, not allowed. You went over your spending limit for the day. We cannot allow you to spend any more money. But I don't see why. It's just digital, electronic. No, you don't. You misunderstand the principle of control. They don't care if it's electronic money. All right? They don't care. The plan is always about control. They even have people bugging, thinking that, oh, this is just fear mongering. Nothing's going to happen. They've been saying something's going to happen and it never has. That is a statement of ignorance because it has been happening and going on now for decades. Little bit by little bit. Not all at once, because they don't want to alarm anyone. They don't want the conspiracy theorists to start spoiling things for them by outing them. So they do things little bit by little bit. Take a little bit here, take a little bit there, and you don't feel it. You don't see the incrementalism being deployed against you. You don't feel it. You don't really see it. They just turn up the heat ever so slightly, a tenth of a degree, barely even recognizable to you. You don't know that the temperature when you first started was at 75 degrees, but now it's 120 degrees and you don't even feel it because they've been incrementally raising the temperature ever so slightly for the past 20 to 30 years. So if you take 30 years to go from 75 degrees to 170 degrees, you've become accustomed to it. You feel like it's normal. You're good to go. You're like, I don't see what the problem is. You don't know that you're boiling and cooking. They got you in a slow cook. But that's what's happening here in the States. Slow cook, slow broil. All right. This is definitely something that you need to look at. And that's what we're going to do. All right. So you see SIV, or sorry, SVB Financial Group. You had multiple warnings. All right. If you did not take them, it is your fault. How do they say ignorance is 9/10 of the law? All right. Let's take a look at some other things. We're just getting started. You mentioned Bank of America, so let's take a look at Bank of America, shall we? You're going to see a pattern here, ladies and gentlemen, and it's not a good one. Bank of America also has been in a bear market for quite some time. What do we do in bear markets? We sell rallies. Well, Bank of America gave you a gift. It gave you a bear market rally that technically started on the week of October the 12th of 2022. The market proceeded to rally from $29.86 all the way up to $38.60 on the week of November the 11th of 2022. The following day, you got your red alert message, crash alert. The top is in. Prepare for the downside. Market moved sideways a little bit, gave you another warning 2 days later, saying this is only the beginning. The market proceeded to move sideways and they move up a little bit gradually just to lure you into a state of confidence and complacency. I'm sure some people who felt that they missed an opportunity to get in this market did so. How do we know that? By looking at the volume. So this one here had over 32 million shares. Then it went down to 27 million. Here, 23 million. Here, 18 million. But on this one, you had 16 million. Then we got a negative bot check, and it gave us 35 plus million shares traded on the week of November the 28th of 2022. That's a negative bot check. Negative bot checks, especially in a bear market, is an ominous sign letting you know that a very big decline is coming. Following day, nothing really happened. So people say, I'm using this as a buying opportunity. 27 million shares exchange hands. Then the market explodes with a rally. 51 million shares exchange hands because now hey, look, this market just exploded to a new weekly high. What are you talking about? This is a buying opportunity. 51 million shares, the most amount of shares traded hands on the week of November the 30th since the red alert crash alert came the week of November the 14th. It's the largest one-day amount of shares exchanging hands, over 51 million shares. 51 million. But then something went wrong. The following day, you got another bot check, a negative bot check. That's what these red diamonds mean. These red diamonds are negative bot checks. When you see them, especially in a bear market, prepare for a crash. The green ones, especially the green diamonds, especially in a bull market, prepare for an explosive rally. Well, something happened. The next day, the wheels came off, and the rest is history. The market just absolutely collapsed, fell out of bed, dropped precipitously on you. And then what did it do? The week of December the 19th, just 5 days before Christmas, you got a rally alert. Saying that the downside is over, the sell-off is over. Time for the market bounce and maybe even a bear market rally. So the market proceeded to move from $32 a share that day and ran all the way up to $35.39 a share. And now you know what the market's doing today. There are myriads of these examples, ladies and gentlemen. How about this one? How about the Spider S&P Bank ETF, ticker KBE? It's been in a bear market for quite some time with little bear market rallies. Rallies always getting sold here and here. And then look what happened on Friday. Back-to-back new 52-week lows. Thursday made a 52-week low. Friday made a new 52-week low. Why do you think that is? Now, I want to show you something. Remember the chart of SVB Financial. Remember what I said. Everything that can be known that is known is already factored into the price of the market. We didn't get that sell-off bar in KBE until the final day when it gapped down. But this bar moved down a day before, a day earlier to the SVB. Can we say that somebody knew something? Let's take another look. Because maybe you're not convinced. Maybe you need to see it one more time. So let me show it to you. Let's pull it up. Where did it go? SVB. Where did you go? You're hiding from me. You are hiding. Here you go. All right. Oh, that's SJB. Oops. Where did it go? Here we go. All right. So you got this one bar right here, Friday. Thursday was just a little teeny narrow range inside day kind of a bar. 800,000 shares 835,000 shares exchanged hands. All right. This was Thursday. Friday was the day of reckoning. We went from 500,000, we went from 835,000 shares exchanging hands on Thursday in SVB to over 38 million shares exchanging hands on Friday. 38 million shares. Thursday, nothing was happening. All was quiet. Friday, everything hits the fan. I'm here to say, once and again, one more again, somebody knew something on Thursday because the bank ETF KBE crashed on Thursday and then crashed even more on Friday. Somebody knew something on Thursday. I'll venture to say someone even knew something on Wednesday. Ladies and gentlemen, you can't make this stuff up. It's right here in your face. Don't tell me that no one knew and this came, this blindsided us. How could we have known? How could you have known? This red bearish trend momentum reading bar started back here on the week of February the 8th of this year, telling you something was wrong. You see this red line here? That is letting you know sell the rally mode is now in effect. Last time we got this was back here the week of November the 14th, 2022. It said sell the rally mode is in effect. And you got this negative bot check right here. You can't make this stuff up. You just can't. How about good old JP Morgan? Let's see. Do I have the updated chart on this one? No, I do not. All right. So some of these I don't have the updated charts on them, but that's okay. I think you see the gist of where I'm going with this. You see what we're talking about. All right. This here is the Financial Select Spider. Some of you know about the head fakes in the markets and the false starts and things of that nature. And sometimes trades need time to develop, right? Now, this one would have threw you off a little bit because if you just looked at the Financial Spider, you'd be like, well, the Financial Spider is in a bull market, Dex. Yeah, I see the green on the screen. You went from a bear market to a bull market, which means that the bear market rally that started the week of October the 13th of 2022 in XLF went deep enough to change the trend of the market from a bear market to a bull market. All right. And it went up for a couple of weeks. But something was wrong because the first sign you got was on February the 8th. You got a crash alert back to back. Also got one on the 9th. And then you got this red bearish trend momentum reading saying we are now in sell the rally mode. Get out of your longs and or get short. Something is not right. Now, if you go all the way back here, you see it again. The week of August the 17th of 2022, you got the sell the rally alert. The crash alert came. What did the market do? It collapsed. Prices collapsed. This is why I do what I do. They want to make up excuses on the TV. They want to lie and say there's no way we could have known X, Y, and Z. How could we have known these things? No one knows these things. That is a lie. That is a bold-faced lie. You do know these things, and you know them in advance. Another principle that I have shared with you all, beside all that can be known is known in the price, is that whenever there is a big move in the markets, I don't care if it's a fat finger lie, where it's, oh, a fat finger did this. A well in the basement of his mother's house in London pushed sell 1 million shares, and he only meant to sell 100 shares. He only has $30,000 in his account, so we don't know what happened. We're gonna have to look into this. Lies. I don't care if it's a flash crash. I don't care if it's some breaking news event. History shows that the biggest price moves in a market, whether it be some kind of explosive breakaway gap up bull explosion, or whether it be a pandemic crash in the markets that comes out of nowhere. That's what it appears to be. That's what they tell you on the business channels. No one could have saw this coming. Look at this big move. This is incredible. This is so spiritual. That's a lie. If you have listened to me for any amount of time on this channel, I've always alerted you to the fact of the market. It's a golden rule, a golden principle. The largest one-day moves, or whatever, however you want to measure it, the biggest moves in the market always come and go with the prevailing trend of the market, going all the way back, as far back as you want to go. That's always the case. Always. Zero exceptions. I don't care. Even if you say, well, that's not true, Dex, because what about times when, a terrorist thing happens or something like that? No one can see that coming. No one knew that planes would be flown into buildings. No one knew that that a building would be lit on fire. No one knew this and that. No one knew. No one knew. But as I showed you on numerous occasions on this channel, that too is a lie. On 9/11, if you look at the charts, 2 weeks prior to that, you already had a crash alert in the market. Had nothing to do with the fact that a terrorist event was going to happen. That's not what the algos do. The algos tell you what's going on with the price action. That's what it tells you. It's not predicting world events. Okay? So regardless of the world event, regardless of the May the 6th of 2010 flash crash, did you know that market also had one of these? It had a bearish trend momentum reading. That's right. A bearish trend momentum reading. And this was at minimum a week before the crash. At minimum. It's just one of those things in life that you just have to, you don't have to, like it or even agree with it, but you just have to accept it. They're facts of life. For those of you old enough to remember the show, The Facts of Life. You know all about it. You know how it is. You know what they learned during The Facts of Life? That things happen and it's all a part of life, right? And you just have to get down with it. You just have to understand it. Some things just are, okay? Some things just are because they are. All right, let's see here. All right. Give me just a moment to demonstrate a little something for you. Just got to find my data. All right. All right. Okay, here we go. All right. This right here is September the 10th of 2001. When did 9/11 happen? This just jumps a week. But look what happened. Look when this happened. This is the part I want you to see. Nothing happens out of the blue. It's no such a thing. Everything that can be known, that is known, is already factored into the price. So, the week of, drum roll please, May the 23rd The good old week of May 23rd of 2001, what do we have here? A crash alert. The S&P 500, ticker SPY, gave you that alert. What else do we have? We have a red line. Look how far out the red line goes. That's a bearish trend momentum reading. It means we have turned on the sell the rallies mode now. The top in the market is in, and this is where we are. You can't make this stuff up. So 9/11 happened under whose watch? A bullish line or a bearish one? Here's your 9/11 data right here. It happened during a bearish trend momentum reading. It didn't happen when the market was in a bullish mode or up mode or trending and the floor just came out. No, that's not how things happen. The market was already headed down. It had been heading down since May of that year. So when 9/11 happened, it just accelerated and exacerbated the move. The market was going here anyway. It was already going here, ladies and gentlemen. Now do you get it? Is it starting to make a little bit more sense to you now? August the 27th. Remember I said 2 weeks before 9/11? We got signals saying to short the market. Why? Because on the week of August the 27th of 2001, we got this red diamond here, a negative bot check, telling us that a massive down move was coming. Again, let me preface this. The algo charts are not future predictions of world events. It only predicts market price. Has nothing to do with world events. All right. It's not a crystal ball. It's not a prophet. It's just an algo chart letting you know what's going on in the markets. Has nothing to do with any outside events or situations. So just let me preface that again. All right. So that was then. All right. So now let us go fast forward in time. Because I know sometimes people need a little bit more convincing. It's hard to convince them. They don't want to believe. We got a lot of non-believers out there. And I understand it. I get it. I get it. Because you've been lied to most of your life about everything in the world. And it's hard to believe just about anything these days. All right. So this is... Here we go. All right. I made it bigger so you can see it a little bit, but I can make it smaller so it can make sense. Let's bring it on in. All right. As you see here, this bar right here is the May the 6th flash crash when the Dow dropped 1,000 points out of nowhere. No one could have seen this coming. Oh, my goodness. Lie. The week of April the 27th of 2010, we got a crash alert warning you that we're now in sell the rallies mode. The market has topped and it's time to start shorting. Then you got another red alert 3 days later, giving you another crash alert on the week of April the 30th, 2010, warning you that the downside was forthwith. The market had already started moving down, folks. And then the flash crash happens. Did the flash crash happen in a bubble? No. Did the flash crash happen when the market was bullish and trending upward? No. It happened with a bearish trend momentum reading, ladies and gentlemen. These things don't just fall out of the sky and happen in the blue. I am showing you with real examples, real historical examples, that the moves that you see that happen always happen with the prevailing trend of the market. Everything that is known can be known is already factored into the price. Anything that's known up until that point has already been factored into the price. But on the financial channels, you hear people say, the market really hasn't factored this in. The market really hasn't factored that in. It's a lie. Yes, it has. And it will adjust accordingly. So I've shown you 9/11. And now it's showing you the May the 6th flash crash. Now I'm going to show you something else, something a little bit more real, a little bit closer to home, a little bit less uncomfortable. All right. So let's get into it here. Let me find it for you. All right. Okay, here we go. Here we go. These things don't just happen like that, Dex. They do. Sometimes things do happen. All right. So take a look at the week of February the 20th, 2020. Right? This is the pandemic. You got a crash alert on this day, followed by another crash alert 2 days afterwards on the week of February the 24th, 2020. What do you notice here? You notice, yeah, the market's in a bull market, but you got a red bearish trend momentum reading. It told you on the week of February the 20th that the market had topped out. The high is in. It's time to sell the rally mode. It told you this before the big drop that happened right after the week of March the 5th, when the floor came out from under the market. This huge downward thrust, this apocalyptic move in the market came during a bearish trend momentum reading. The market was already in a bearish pattern before the big moves came. You can't make this stuff up. Every major market event that we have had that had huge moves have always come in the prevailing trend of the market. See, people are mistaken. They think that when you say, oh, we're in a bull market or we're in a bear market, that it means that the prices are always moving in that direction. That is not true. Bear markets have bear market corrections where the markets rally off the new lows. Bull markets have bull market corrections where the market corrects and drops after a big run. Now, again, we're still using the S&P 500, the SPY ticker. Notice here that for a long time, day after day, week after week, the market was hitting new 52-week highs continually. It just would not, a train that would not stop, leading up to the week of February the 20th of 2000 before you got the alert. So you got one alert here, that's two alerts. 3 alerts came before the really big crash happened. You had 3 chances to get out of long positions and or go into short the market, because that's what the red bar means, sell the rallies. You had multitudes of opportunity before the big plummet comes. These warnings always come before the moves. Always. Always and forever. Always. So miss me with all the poppycock, all the lies, all the myths. Miss me with that. The price is all you need to know. Price action is all you need to know. Fundamental analysis can lie. Books can be cooked. We know that. Fuzzy arithmetic, magic math can mislead people. Yeah, but the K1 reports can lie too. But the price action will never lie. It will always give you the heads up when something is coming. All right. I've showed you 3 major examples using real live world events, historical documented events. I showed you 9/11. I showed you the May 6, 2010 flash crash. Now I'm showing you the pandemic crash. It always moves with the prevailing trend of the market. It's never a surprise. It's never a sneak hit. It's never a wayward punch. Never, 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 never. It's never an accident. We could have never, how no one could have seen this coming. That is a lie. I've even showed you when we first started this live stream today. I showed you where even with the SVB Bank, you had a minimum of 3 warnings before that stock crashed. 3 warnings. Count them. 1, 2, 3. I'm showing you evidence after evidence after evidence. I'm trying to drill this home to you. Nothing happens in a vacuum. These things, if are not preordained, they're definitely pre-planned events where someone knows what's coming. They know what's happening. All right? I'm just saying. So this is what it is, folks. So now the question is, where do we go from here? Well, we got some things going on this week. We got, what is it, PPI and CPI, something like that. So Tuesday and Wednesday, we got two big reports coming out, which could mean something or not. But as long as this red line is here, sell the rally mode is in full effect. All right? It's in full effect. Until that changes, nothing changes. I don't care how high the market rallies. I don't care what the plunge protection team does. As long as this line is red, whatever rally you see will soon be dead. The bears are coming to smash it down. The market will reclaim it. All right? It's just how it is. You don't ignore these crash alerts right here, and you don't ignore these bot checks because they tell you what's happening. They tell you what's going to happen. It's not a secret, man. These things are not secrets. So what lies are they going to tell us today? Oh, everything's okay. You don't have to worry. Don't worry. Be happy. You own nothing and be happy. No, I don't think so. We know better. We know what's going on now. We see clearly. Our mirror is not blurry. We know what is happening. We know what is transpiring because the price action tells us everything we need to know. And that's just a fact. It just is what it is, you know? So going forward, we'll see where all this leads, but, you know, the banking system is having some issues. And we're not taken aback by this either because we were warned about this, remember? Remember that? So we were told back in 2020, I believe it was, that within the next 2 to 3 years, there will be a banking crisis. And that's what's happening right now. What's happening right now? A banking crisis. A crisis of banks. Is that going to change anytime soon? I don't think so. I don't. Because this is all part of a coordinated effort as well. We can't be ignorant of these things, ladies and gentlemen. We have to see what's going on. Anything that's happening right now is being done on purpose. All right? There's always an agenda. Sometimes there are clashing agendas, but there's always an agenda. There's always an angle that's at work, and it's normally not for the good of the people. It's always for the good of the people who hold power over the people. So I just wanted to throw that out there. I didn't want this to be too long in the tooth. I think we've gone for an hour. I think that's long enough for me to make my point that you don't have to just take it laying down. You don't have to believe what they're telling you. What you need to do, though, is figure out what the prevailing trend is and go with it. That's what the pulse waves are for. That's why I pull out these daily reports. I put them out for our subscribers so that you can know what's coming in the market, so you can know what type of a market you're dealing with, what kind of market conditions are ongoing at that time, so that you know how to take advantage of it. What do you do? How do you move in this environment? You know, you have to know it. You have to know where the opportunities are. That's one thing I like about trend following as a trader, is that we thrive off of calamity. The more off the hook a situation is, the more profit potential exists. And that's just the way it is. We thrive off of calamity and chaos. So, what do we go from here with these banks? Are they going to wait until Friday, like they laughed in their video, before they close the market down and call a banking holiday, or bail-ins? A bail-in is when they get to keep all of your cash and tell you thank you very much for putting your money in here, but so that we can survive because of all the bad loans we did, all the bad investments we did, so that we can survive all the malfeasance that we've done, so that we can survive all of the manipulation and misappropriation of funds and embezzlement and money laundering, so that we as the banking system can survive all these dirty things we've done. We need to keep your money. And they made it legal. They've passed laws that say that they can do that. And there's nothing you can do about it. See, all these years they've sold you on the bill of goods that the bank is the safest place to put your money, because you don't have to worry about anyone coming in and robbing and stealing your money. We insure it with the FDIC. If anyone tries to come up in these banks, we're going to call in the National Guard, and we're going to fill them full of holes. Have you always noticed, especially like in a lot of the action movies, that if a person, shoots a man on the street, the cops will respond. If a person goes missing, the police will do their best to try to locate the person, or put out flyers or put out APBs, that kind of thing. If a child goes missing, they'll put out an Amber Alert. If a person goes missing in the woods, they'll send out teams of people and volunteers to go and try to find the person. But things take a dark twist when a bank is involved. If someone runs up into a bank, you better believe the alphabet agencies are coming to the rescue. They're bringing in all types of suits. They're bringing in military. They're doing whatever. The full power of the U.S. military is at their disposal when you mess with a bank. That's when they pull out all of the big cards. Have you ever noticed that? Touch a bank and it's World War III. Touch a regular human being, and for the most part, who cares? But that's the one thing that they pull out all the stops for. Any bank heist movie you ever seen, or bank robbery movie, bullets are always involved. Violence is always involved when you touch a bank or touch the Federal Reserve. That's when the bullets start flying, and they are prepared to take a life, even with cameras rolling. Just something to think about, all right, as you're going forward. If you're not already a member, subscriber of the Postway Report, do yourself a favor. Go to postwaytrading.com. Take the 14-day challenge. See how much money you can make utilizing the reports free of charge. I am convinced that you won't even last the 14 days before you're saying, where has this been all my life? If I had $1 for every time I heard someone say, I wish I would have known about you 10 years ago, 20 years ago, 5 years ago, before I lost all my money. My goodness. Yeah, I know. But you can thank YouTube algorithms for that, for blackballing me and not putting me in recommended spots. Back in the day, I used to get recommended all the time. And now it's, shadow banning and blackballing and whatever other term you can use. And it is what it is. But I'm still here, still trying to help as many people as possible. with the power of the pulse waves. And with that being said, remember the system works if you work the system. So make money, not excuses. Bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. Smash that like button, and I'm out. Peace.